Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. Today's agenda, we'll go through our regular market update our earnings trays, and then finish up with Joe's analysis at the end. So let's get started. Okay, so indices all still in state one, all of them positive so far. So good start for those state ones. Pie wise, you can see last week we had just crossed over 50, so now we're at 64 almost, and 45% of those are in state one. So that's a overbought signal, 45% state one. So that's where we are there. Sector wise, you can see energies in two. Real estate, came out at 8, so that's 7. Everything else is in 1. So we get a lot of state one transitions and not much else, you know, able to make it up there. You got 8% left in twos, and then you still got 20 in state 8. So let's look at the market pulse. So this is all states. So you can see that big drop in twos here. We were at 34, so now we're down to 8. Those all went back into 1. So now we're up kind of that high level state ones. So, obviously back here we crossed above that like 45 and, kind of maintain that. So it could be, a good run if we, as long as we don't pull one of these, where we kind of peak right around that 45 area and then, drop off. So if we get up here, we're up at 45. So as long as we're maintaining, we can have a good run. So, so that's how we're looking there. Nothing else, getting a few 7s, um, from the 8s, but kind of slow going there. This is definitely constructive down here. We're getting highs again. So, that's what we want to see. We want to see high state ones, because that's where new highs are made in state one. And we want to see this continue. So, we had that little pullback here, which was definitely needed after this huge run from October. A nice pullback, went below the 50 days moving averages, things like that, but only temporarily. And now, we're getting these new highs, and we got a lot in state one. So we keep getting these greens, and this all uh, basically giving us the green light, bullish signals. So there's a state one transition. Those were huge moves, and Joe did the analysis on that last week. So, all right, and then bullish, bearish. I'm gonna rein this in a little. So, we got that cross last week. So we're up in the 60s. It's kind of, you can see back here, it's kind of where we bounced. We had a huge move up here, 84. That's real high. But, kind of got in the groove here, just hanging around 60, hanging around 45 on the state ones, and just cranked higher. And, we got the green light down here. So, it's set up to do the same thing, as long as we don't run into some kind of resistance roadblock or whatnot. So, but that's how it's looking right now. So SPX, get the tool here. So we're above entry, which is positive. Yeah, we talked last week, the top end of this range is right here, 5,400. There's the bottom 5. So that's our range. So, we can get up here. I'd expect pretty strong resistance being at the top of the range and coincides right with our target 1, target 2 area. So, typically we'll run up here, kind of resist, and then pop back up like that. And a third, maybe a little less than a third of the time, we can get above 3, and the rest of the time we go back into 2. So, so that's where we're at. We're only 6 days in so far. It's been, had that little bit below and then came up. So that's our support right now. Bottom level, let's call it 5190 area, and see if we can just kind of grind higher up into our first pretty strong, I would expect, resistance range. But we still got a lot of time, so only basically a weekend, and on average, we have 43 trading days, so it's a lot. That's it's like 2 months. So, but so far looking good. Go to the chart here. So, we popped below, the 20 was very important on the last run up. So we crossed below that. We even got below the 50. If we look at the chart, the 20 never got below the 50 here, so it wasn't that kind of cross. But now, we crossed the price actually crossed above the 50 and the 20, so we'll be using those as support. See if we can get another run out of this. But here's your current prices, 51.50, and then 5109. The entry price 5190. So that's above that. That's above both those. So that's kind of your little steps on the way down for support. And we're at all-time highs today, and there's nothing up until here, the 5,400. So nothing blocking that route. So I'll just kind of put it up here. And then, obviously the bottom of the range, 5,000, which held, we were, when we crossed below that 20 and 50, we had to point out, to keep your eye on that level. Sorry, I'm trying to get this tool back up. And right in that range. So, broke below and popped back up, showed support, and then we're off. So that's where we're at on SPX. Now the Russell. Good old Russell, 2100, top of the range, bottom range 19. It's off the chart here. So kind of been fighting back and forth on entry price, so we're above it now. So that will be support 21 or 2064. So that is support. And then obviously, the typical move will kind of climb up here. Past same thing showed with SPX, but I think critical is getting above 2100, and then we get above that, pretty easily. I would think get into this range. We'll get some more resistance in that range, but I think key is closing above, holding above 2100. Yeah, I think that's a big thing with the market. Right now, nothing really blocking SPX, but big time problem in the past with the Russell, and we'll pull it up on the chart here. So here we go, 21 or there, guy. So The longer we're hanging around here, the better. So we don't want to see these kind of, this 1, 2, 3 days and this crash below, here, the one, let me put the other, the bottom of range here. There's the 19. So we're well off that. So same thing, we're above moving averages. 50 obviously is more important on this one. So that's support. You also have the entry price 2064, and this one is 2026. So entry price on say one's higher for support below that here, and then obviously 200s at the bottom of the range. But I think right now we are, let me clear those. I think we're above 2100. So yeah, let's see if we can close there, hold there for a few days and get some more upward action. And then we can set a new range, to the upside. So that would be a welcome addition. I think one of the big things, obviously, we had a lot of inflation data and you can see the reaction from the 10-year. So that's definitely a tailwind for the market. When we get drops here below 4.5, I think is positive for the market, at least in the current environment. So we got up 4.7s. So that it was really trying to hold that 4.5, and then just kind of broke down in the past day or two with these inflation ratings, and I think that's overall net positive, helping the market. Russell's up a little over 1%, so let's see if we can close and hold above there. So that's the big thing, I think, overall with the market. Let's go into the Fed. Nothing really changed for the next meeting, very much same as last week. I think September changed a little bit, so it just moved a little more towards a, stronger towards a cut, even two. I doubt that would happen, but so September looks like first cut, and then December, pretty much not much change overall. A little stronger towards two, but not too much movement overall. Let's see here, Fed. Just the trend line continues. They said they're going to slow things, so and we'll just keep an eye on that. See if this trend line kind of flattens out a little more. But we're at 7.362, not much of a runoff in the previous week, but we'll keep our eye on it and see how the Fed's running off their balance sheet. I did pull up this CPI, urban consumers. I got so many charts in there, it's pretty crazy. But this one, let's pull up. So this is kind of like the old trend line. So you can see since 2021, you can just see how much we've been, I know everyone can tell this, by, just going shopping, but this point right here, basically, we kind of diverted off that usual inflation trickle where, you don't notice it that much, the 2% trickle, but, since then they did a calculation, it's 5.5 annualized inflation to your pocketbook. So you notice that, definitely. So hopefully that slows down and reverses. I would think eventually we'll revert back to that trend line, but that's what the Fed wants, right? The 2% trickle. So 2%. So sorry, it's hard to write with a mouse. But so that's where we are. Thought that was interesting. Wanted to pull it up, and think that's it for market update. I'll open up to questions, comments.
Seems like we're temporarily overbought.
Yeah. Oh, definitely. We're at 45. Yeah, we're fairly elevated, not like big in the buy, not like an 80 or something, but we're up there. I mean, even those old runs, I mean, we're up at 45. We do little dips like that. I wouldn't expect, something like this, like a big dip, but we can get these little kind of walking up type action, I would think. But
Ever done, a lot of the studies are the Keltner channel, um, a pullback or a deep pullback.
mhm.
Have you ever done it the other way where it's uh, at the top of the Keltner channel?
Yeah, well, I mean, I've tested them. The bear strategies, you just get it's super hard. Um, I think part of his put pricing is elevated. So you just if you're not right, quickly, it's hard.
Mhm.
So I've done a lot of testing on it, but still haven't found you know uh, systematic bear strategy really
Yeah,
for daily trade. So open to ideas, obviously. I think once we get everything lined up, we're on the cloud, we're humming, be a lot easier to test ideas. And I'm sure Joe has a few, in the back recesses of his mind that I'll find that'll be 100% winners. We'll all get
At
our
least, Josh.
yachts. We'll do these meeting on our on a yacht. So
because if I look at it, like the spies are way above the Keltner channel.
yeah, the ETFs are harder on the Keltners. The stocks usually behave better.
Yeah. So I'm wondering if there's any kind of reversal signal that is testable. Not that it would go into a complete state two or a downtrend, but
Yeah,
like you were saying, those small pullbacks. This is what it feels like to me, like we're due for some pullback because I think we're gonna close at all-time highs today.
hmm
And if we step that, that's just kind of, and we're at the top of the Keltner and Bollinger Bands. Um, seems like a time for a pullback.
yeah. I don't know why they give you 50 and 5. I mean, you can do like 30 or 22. Yeah, I mean, we're way. Yeah, it's not. That's like the trend line. That's like the 20-day EMA right there. It's just like that's pretty crazy. Like it touches it and you're like, oh, it's gonna, revert and you just get crushed. Yeah, it's harder, especially like this type of move. This is just the past couple days, right?
Yeah.
So,
Yeah.
dear, I hear what you're saying as far as the pullback, but don't you think we may have just gotten one, not too long ago, where a lot of those tech stocks got beat up bad. A lot of the market kind of went sideways, but a lot of the leadership was down 20% over the course of a couple of weeks. I kind of think we've had the correction.
Well, that could be right. We did have a correction. I don't know if it's the end of corrections.
Hard to say, but so many numbers, coming out of the platform, are just positive. And average days on most of these things is 30 to 45 days.
That's true.
So
Yeah.
I think we have to wait until next Wednesday. Personally, I think it's going to be, the NVIDIA earnings, which are after the market close next Wednesday. I think that will be the catalyst for potentially getting into an overbought situation.
Yeah, I mean, you make a good point. NVIDIA is really driving a lot of the market. So that earnings will move the market.
Yeah.
And I mean, it's pretty amazing. I mean, the pullback we got was darn isolated. It was essentially in most of the techs and then a couple other assorteds. In many cases we got 20%, but it was lightning fast. And here we are. Many of the state transitions going from 1 to 2 and now back to 1. State 2 was a positive. We didn't get anywhere near the average pullback in those state 2s. So we'll see.
Good point.
Yep. Getting a 1, 2. That's all. That's what was that one we were talking about the other day, Joe? ANET. This is like
Yes.
Yeah. Look how fast it's loading. Yeah, our programmer's been doing good, like getting these things loading faster, but we're look at this 1, 2, 1, 2 magic. Yeah. That's from about a year ago. First one, Fed, over a year. 120, now it's 300. That's what you look for, bullish stocks, 1, 2, 1, 2, 1, 2. So anyway. Thanks, Adair. Anyone else? Questions?
Thank you, Shadir.
Yeah. Okay, we'll go through earnings. Both pre-runners. Let's run through them real quick. This one, we got 10, 1, 2, 3, 4, 6. So it's actually losing record, and we're down. So kind of repeating Q1 from the past 2 years previous. Only had one bearish pre-runner. That was a winner. Bullish runners. So we only have one open PSX. So we're up some there. So we have one loss, ECN. All the others closed out profitable. So kind of trading off bearish runners. So we got a few of those open. Nothing closed yet. So slightly up on that with 5 trades open. And then we got Vol Rise active. Foot Locker. So this one's doing pretty well. We got one open and then 3 closed. So that one's up overall. And then we got our non-mover. So our Pfizer did not do well. So F&D, this one's got till Friday. So we got to get this below 125. We're down decent here. NXPI was good. Pfizer did not come back. So it stayed above. That thing it closed around 28 that day. So this one usually does well, but can't. Maybe it's just the Q1 thing. So overall, I'd say we're probably down a little, but still a few more trades, and I'm looking forward to next quarter. To not be in Q1, so that's a month out. Get out of this quarter, but yeah. So, any comments, questions on that? Okay, that does it for me. Joe, you ready?
All right, Josh. Let me grab a screen here. Handful of different charts. All right. And hi, everybody. like I was saying, so many of these things have rolled now into state one, and we got, weeks in terms of the average period of time in state ones or other bullish states. So it just keeps me encouraged about surprises continuing to the upside. I'll pull something, we're still just, we're at 63% of the pie. I mean, it's not a big deal. Josh, talks about that 45% level, on the state ones, but I think that's just, that's not all that uncommon. So, I still think we have room to run for sure. And I'll speak to maybe potential targets, but, first chart I like to pull up is one we've been talking about the last few weeks, and good old Microsoft, such an important stock, and lo and behold, rolls into state one last night. We're talking about 40 days on average. That's just another darn positive sign for the market from my perspective. There's Microsoft. Actually, let me go back. Someday, and we have a long laundry list of things we want to do, but coming up with a formula, for the effectiveness of state modeling in individual issues, I think would be a benefit to all of us. That's why I'm going back here. I mean, we know, from time to time you get bad signals. You certainly got a bad 8 in, Microsoft, back in early 2023, but, more often than not, signal's not bad. And, the fact we've just rolled into a state one, I think is awful encouraging for the market. Number 2, here's when we've talked about, but maybe haven't, how about Apple going into state one, over the last 3 days. And it has been a while since this thing just, we know how it's underperformed the markets. It's been quite a while since we get into a state one here. I think this one is important to keep an eye on. Are we going to go to new recent highs and, be off to the races? Let me see. Their earnings, were a week and a half or so ago. So another one to keep an eye on. And then mentioned earlier, the NVIDIA, that's next Wednesday after the market closes. We went into that state too, and the market just turned around. I think NVIDIA topped the bottom, and its high was in the 970s, maybe 974. That was early. It was March 8th. I know we've talked about this before. Some of the semi indexes, topped on March 8th. You got a little bit of a retest later in the month, and then, in many instances, it was a 20% correction over a couple week period, and then bang, off we go. And as I mentioned before, to me, that's kind of the only thing that's changed, in the market, in terms of how the market trades. It's just the speed of things, and I think that speaks to the importance of using options, for your risk management, and then of course knowing your risk depending on the trade you put on. So here's SPX, and I'm going to take a little different approach today, with how we look at some of these charts. And the point is, as we, no matter, just basically extremes, just want to, get a gauge for when are we at extremes. And so, I'm going to use the 20-day moving average, and I would encourage you all to, if you don't do it already, just get into the habit of, and again, I think it's something in time, we'll be able to add systematically to the platform, but distances above and below, maybe your favorite moving averages. And, I happen to like the 20, the 50, but in terms of the 20, here's SPX. And I went back over the last couple of years. I went back, to September of 22, just before, the bottom of the bear market in October, November of 22. And I went in and I measured the distances, on the upside, how far, the S&P, the high of the S&P versus the 20-day moving average at its extremes. And I had a nice chart in here that had all kinds of little doodads on it. And of course, Josh, that chart has vanished. I tried to save a template, but, periods like right in here, where you get the extreme, the distance, from in the upcycle, the top of the S&P to the 20-day average. So, there are different periods right in here. November 15th, I was 200 points, okay, from your 20-day moving average to the high in the S&P. And 200 was only one other period. It was a year later. No, actually, I'm sorry, it was right here. Right here, it's a little 222 points, the differential between the 20-day moving average and the high in the S&P. But when I analyzed, the last couple of years, the range, when you're starting to get a little choppy and extreme, is really between 160 and 225 points from the 20-day moving average. Again, this is to the upside. And, if you're going to project, obviously you have to keep track of, how much the moving average is increasing or decreasing each day. At the extreme periods here over this couple of years, I think the most that 20-day average was moving on a day-to-day basis was 12 points, but somewhere in the 8 to 12 point range is, kind of the extreme for the average moving up. So if you're trying to project a week or two out, you obviously have to, kind of project where that moving average is going to be. I think right now, where are we? We're kind of in the midpoint of that. Where are we? 51. We're about 144 points difference. So that, from a moving average standpoint, it would still suggest maybe we've got some room, on the extreme. Or are we right around 5,300 right now? I think in the S&P, I think we're close to 5,300. If you take the moving average and you add that 225 points, from the 5106, maybe you've got another, 25 points in the S&P to the upside. But then again, tomorrow we'll have to add, the moving average going up 10. So, but just in terms of giving you levels, you happen to be doing covered calls, things like that, just to maybe be comfortable with extremes, versus the moving average. And obviously, pick any moving average that you're interested in. I wanted to go back, back to the pie. And so, we talk about extremes in the pie. We're only at 63 now. It wouldn't shock me if the pie, gets up into the mid-high 70s or even 80s, before the market rolls over here. One of the last times this happened was, and I will do more work on this, but, kind of before the market low. And we were off the charts in terms of the pie, which is pretty crazy. The market bottomed a couple months later. And, here we were at 81%, and the pie was like 4 days in a row here where, the pie was north of 80%. I think we turned around and got, coming out of this about an 18, here we are. This is the top in 22. We got a real healthy correction. Actually turned out to be a bit of a 5-wave down, into the October lows of 22. So I'm kind of anticipating still a darn good run in the pie, going forward, but driven by earnings. NVIDIA is going to have a lot to say about that and the psychology of the market a week from now. That's kind of what I'm looking for. I then, wanted to just, and Josh, we haven't talked about this, but I think, something we should do on the homepage is our ETF list. Rather than have them be alphabetical, I think we should put them in order of weight in terms of the S&P. And frankly, 6 of them are a heck of a lot important than the other 5. And XLK, of course, leads the charge at darn near 30% of the S&P 500. So, and lo and behold, XLK, kind of similar look in terms of, we got a couple week pullback, but 4 days ago, this thing, and we were talking about it last week, anticipating the possibility for, these things rolling back into state ones because, prices just continue to crawl higher. And so, 4 days ago, we go into state one, we get another 35 days to go. Very encouraging and, plenty of room, another 5% to the upside, potentially if we're going to get to target one. So that was XLK. And then just the whole idea of maybe, starting to look, if we're looking for points where we think the market's overbought, just kind of simple math, picking our targets, a week or two out based on, some moving averages. If we think we're going to get to extremes and we want to, lighten up our longs, put on some shorts, whatever the case may be. So that's XLK. And XLK, 30% of basically the S&P. XLF, we've talked about this before, 13%. And here we are, we talked about this last week. It had just gone in to a state one. So, still got, plenty of room in terms of its upside state one target as well. There's a look, in terms of the 20-day average. It's kind of interesting how sometimes, it hugs those averages, and then other times, especially at turns, where you get, a little wider distance between the moving average and, the highs for the short term in some of these things. Healthcare is 12% of the S&P, and just rolled into a state one as well 3 days ago. A few more here. We got XLY and XLC both on the consumer side. XLY, a recent state one. We've got some chop in that chart, so that's an easy level to just keep an eye on to see whether or not it's going to break through. And then, another consumers, group, this was actually our first, I think, going back to last November. I think it led the charge in terms of state ones. So, been a week, got a long way to go, if we're going to get up to a state one. So, just a couple different perspectives. I will talk, more about, the pies. I'm going to get back into some pie conversation next week. But again, urge you to, if you're not already, start to, look at some of these charts versus, some shorter term moving averages and the distances above. I did look at Microsoft in terms of the 20-day average, and essentially, when Microsoft gets about 18 to 20 points above the average, it generally pulls back. There've been a couple instances where it got up into the mid and high 20s, but they were really extraordinarily high. So I think that's, let me see, was there anything in this last chart? I don't think so. That's, just the industrials, which were, the industrials are 9% of the industrials, along with the consumer cyclicals, are both 9 and 10% of the S&P 500. So again, that top 6 is 82% of the S&P. So happy to take any comments or questions. As Josh said, we continue to try to work on some things behind the scenes, but we have improved the performance over the last few weeks. I hope those of you who are using the platform notice. So, but we still got a long way to go. I don't know. Is it a long way to go, Josh? It feels like it, but I guess it really isn't.
It's not as long as last month. All right, thanks, Joe. Anyone have have comments, questions for either Joe or myself? All right, well, thank you all. We'll do it again next week.
Thanks, everybody. Bye-bye.